Hi, I'm Kerry Grinkmeyer. I'm the host of Best of Us Investors, and I have no fear. The stock market will reach new highs. That's something I'm sure of. The only question is when, but it will reach new highs. And in this video, I want to explain my confidence to you and give you, hopefully, some resilience so that you can go through this turbulent times that we have and get past your fear. The stock market will probably reach new highs in 2022. And I want to explain to you why I believe that. First of all, you've got to understand what happened over the last 2 years. We had over exuberance, and we had an overabundance of cash available to invest in the stock market. And when you throw $9 trillion in 2020 into the stock market and then follow up with another $3 trillion in 2021, that's like rain coming out of the sky. That money has to land someplace. It comes through your hands, through my hands, through my pockets, and it ends up in the hands of people who don't need it to buy gasoline and put a roof over the head and food on the table. And those people then invest it. And they invested in the stock market, they invested in commodities, they invested in real estate. So everything skyrocketed in price through 2021 or through 2020 and 2021. Even though we were fighting a pandemic. Money rules all. All you have to do is follow the money and you'll figure out what's going on. Well, now it's pulled back a bit. And now the government is saying, we need to correct this. We have inflation, rampant inflation. Well, hey, it might have something to do with the $11 trillion you threw into the market over the last few years. Have you ever thought about that? Well, that's inflation. And then we have a shortage of goods. Well, how did that happen? Well, remember the pandemic and remember the quarantine and remember we shut factories down and we didn't log wood anymore and lumber prices? Well, of course we have inflation. But we'll get through that. And I want to share with you why I think we'll get through with it. And I want to share with you what I think is going to happen in the stock market and the indices. And I'm going to give you some exact numbers where I think the market is going to end up the year and where I think Kerry's portfolio is going to end up the year and where it's going to end up beyond that. Now, wait a second. This is not financial advice. Do not suspect that it is. This is Kerry sharing his experience. He's a retired financial advisor. He looks to past history to give him a clue as to what the future is going to offer him. And then he sits back and he measures the numbers. And then he goes and he talks to his tribe. He talks to other people who are in the stock market and he figures out. And then in his spare time, he reads. He reads about what other people think is going to happen. He gathers knowledge. He pays people for their knowledge so that he can have tools in his toolbox to make him more successful. Let's talk a little bit more about this once I disclose I am not your financial advisor.
Best of Us Investors presents Kerry Grinkmeyer.
Okay, so here we are in coming to the end of March, January, February, March. It'll be the end of the first quarter, and we'll start getting first quarter numbers in. And I think we're going to see that the good companies continued to make money. The marginal companies became even more marginal. And we're going to come to a conclusion as to higher interest rates are not a problem and inflation will go away. And we are going to wake up to the birth of a new world that is being driven by innovation, disruption, technology, artificial intelligence, genome sequencing, genome editing, 3D printing, robotics, all which is going to make the world more efficient. And when it's more efficient, companies make more profits. And when companies make more profits, stock prices go up. So there you are, a simple education in economics. So why do I believe this? Well, what I want to do is I want to take you to my psychiatrist's office, and I want to lay down on the couch, and I want to share with you how I look at the stock market based on past history to help me gain the endurance to endure bad times. Let's take a look at TradingView's history from 2000 to 2022. Okay, I'm back to my psychiatrist, and that is TradingView. This is a chart that I've built that I just constantly go back to give me strength, to give me the endurance to get through the current market. As we know, we've been in about a 2.5 going on 3-month downturn in the market, and it's created by fear. And fear, if we look back on the market, back to 2000, I like to look back, we know, we can look at it and say that was the dot-com bubble. What created it? Fear, overvaluation of non-profitable companies. Fear created that. If we go forward to the 2008, we see the subprime crisis. What was that created by? Well, number one, it was some nonsense created by our banking system who wanted to create a investment vehicle that put bunches of mortgages together to make a product that looked a lot better than it could, and then they fudged the numbers and it all collapsed. And fear came into the market so for 8 months we had a downturn, which then showed us a climb back up. Then the one I think that is in everybody's mind is that of the subprime crisis. Fear came in that we're all going to get sick, that everything's shutting down, the world's shutting down, and then the world woke up and said, no, it's not, that we'll adjust to this. People will be profitable. Amazon made more money. Companies like Peloton and Zoom emerged, and we came out of it. The EV business continued to grow. The healthcare and all continued to grow. So we came out of it. What my point is we are now facing another fear. Fear of the Russia-Ukraine situation, fear of inflation, which is truly a product of the coronavirus. Interest rates have been ridiculously low. Historically, they've been 8%, and now we're going crazy because they're up to 2.5%. That's insane. And so we've had a rotation to safety. And again, it's driven by fear. But so look at my fear graph, and you will see what happens after the fear is settled. What happens after innovation and disruption and technology step in to say that there is less technology, there is less innovation in the economy today than there ever will be in the future. Every day it gets better. If you don't understand artificial intelligence and what it's going to do to every aspect of our world, get up on it. Read a book. Educate yourself. The world is changing faster than it ever has, and it will continue to change faster as we move forward. So my emphasis to you is, look what's happening right now. Look at this chart, and I'm going to switch it from a weekly to a daily, and you will be able to see, look what's happening here. We hit a bottom. In fact, we hit a bottom here on February the 25th. We came close to it on March the 22nd, and then we hit it again on March, came close on March the 4th, and then came and touched it again on March 15th. And then what happened? It's going straight up. Does that remind you of this? Does that remind you of this? So where does it go from here? It goes up here. Why? Why? Because of innovation, because of technology, because of artificial intelligence. Our healthcare field is about to explode with new technology. And if you can't see this, subscribe to Trading Views, build your chart, and you'll save a lot of money from going to a psychiatrist. Okay? This is just so obvious to me, and I want it to be obvious to you. The market historically only goes up. If we go back 1 month, we can see the direction of the stock market from 2000. What direction did it go in? It goes up. All you have to do is have the foresight of what the future is going to present to you and what the technology is going to present to you, so you can put yourself in the stocks that are going to escalate in value. Okay, as you can see, it always ends up going up. What is required is that you stay invested and endure the pain. There will be pain, because as bad behavior takes hold, such as we had bad behavior with the Treasury throwing too much money into the market and holding the market up and artificially creating a market that was feeding off of the trillions of dollars that they put in, 9 trillion in 2020 and another 3 trillion in 2021. That all has to come to an end. And it did, as we recognize, hey, we created inflation. Duh. More money than there are goods. We created a shortage of goods. Duh. Quarantining as a result of the coronavirus. And we created a stock market that was overvalued. As a result, it went down. And then Vladimir jumped in and created a fear of World War III. So the market reacted accordingly. Once you go to the haunted house and you get scared the first time and you crawl into your shell, you gain strength as you see the next spook and you drop your arms a little. And by the time you get out of the haunted house, you're laughing. Ha, ha, ha! Wasn't that a lot of fun? Well, that's where we are right now. Look at, as I showed you on the graph, the stock market is doing the same thing it did back in the dot-com. It dove down and then it came up. The same thing it did in the subprime crisis. It dove down and then it came back. The same thing it did in the coronavirus. It dove down and it came back. The only difference was the duration of the endurance that was required to get through it. It will come back. So, what are my projections? And that's all they are. This is not financial advice. These are my projections. I put this little chart together this morning. It tells you what the S&P, the NASDAQ, the Dow, and Carrie's portfolio has done year to date. As you see, the S&P's down 5.5%, the NASDAQ's down 10% year to date. The Dow's down 4.3%, and Carrie's down 17%. Why is Carrie down so much more than they? Because Carrie's lopsided in his portfolio. He has the big six, the Amazon, Google, Facebook, Microsoft, Facebook, and Nvidia in his portfolio. And they're taking some beating as the fear is going away from tech. even taking a greater beating are my genome sequencing, genome editing, genome therapy, my 3D printing, my fintech. Fear went away from risk. So that's why I'm down 17% and the NASDAQ's down 10. Now, last year, as you see, the S&P was up 26.9, the NASDAQ up was up 21.4, the Dow was up 18, and I was up 13.6. Again, why? And why am I not up as high? I'm taking a greater risk. I'm investing further into the future than any of those indices are. I don't have any of the staples. I don't have any Ford, and I don't have any John Deere and Boeing or anything like that. I'm invested in the future. So now I'm saying, what is my projection for the rest of the year? And what I've done here is I've basically taken and said, over the last 3 weeks, over the last 2.5 weeks, as the market has gone up, how has my portfolio compared to the S&P, the NASDAQ, and the Dow? It's outperforming it. I put an arbitrary number of 10% growth on Carrie's portfolio relative to the S&P, the NASDAQ, and the Dow. And I then surmised, how are they performing relative to my portfolio in the last 2.5 weeks? Now, my portfolio may end up 20% up, but I believe that means the S&P will end up at somewhere around 8, and that the Dow will end up about 6. So if you understand my logic, that's how I'm projecting the future. From that point on, I think I have the hand that to play to win the game. And that is because I recognize what is actually happening in our world, and I'm putting aside all the other trash that we've gathered with it. Give you an example. Heard on the news today that Exxon, in some of their drilling, has a strike going on as our gas prices are going up. What is that? Why are they striking? Because labor is in conflict with management. That has been something that has held us back for years. Now, granted, unions helped our country back when we were emerging. But right now, if you're going to play on a football team and the offense is not working with the defense, you're going to lose. That's what we have going on in manufacturing. We had John Deere had a strike during the pandemic. We had Kellogg's had a strike during the pandemic. So you have management and workforce at opposite ends. As a result of that, we threw our hands up 10, 20 years ago and said, to hell with that, let's let China deal with that. They don't have unions. And we let our manufacturing go away. So now what are we going to do? We're going to bring it back because we've learned there is a consequence to letting your manufacturing be overseas. They've got you by the short hairs. And then any time they want to stop semiconductors coming and shut down your auto industry, they can do it. Hell, I needed a new battery for my camera, and I ordered it 3 months ago, and I got it yesterday. Came from China. Did I learn something? Don't buy a Chinese camera, I guess. I don't know. So, with that being said, we are going through a change, and that change is dealing to my portfolio because I am involved in genome sequencing, genome editing, genome therapy. I am involved in 3D printing. Think about it. If I'm a car manufacturer, look at Elon's cars. Look, have you ever seen a video of those cars being? There are very few human beings in there. So They have replaced everything with robots, makes it more efficient. They're going to then make the parts by 3D printing. Hell, they're making hearts and lungs through 3D printing. I saw a guy who had a new ear printed on a 3D printer. That's the future. So I'm invested in the future. So when I say my portfolio will outperform the indices in 2022 by a little bit, it's going to blow them out of the water as we move into the future. Because again, artificial intelligence is the gathering of all the intelligence that all of us have and then pooling it into a quantum computer and magnifying the efficiency of it. That's where we are. That's how I'm investing. So how you invest is up to you. That's what I do. The other thing I do is I buy other people's knowledge. I subscribe to Trading Views. I subscribe to Seeking Alpha. I subscribe to Stock Cards. And now I'm going to increase my subscriptions to some of the gurus. And I'm going to suck that information in, slice it and dice it, and share it with my tribe. Who are my tribe? Those are the people who meet with us at our Discord. If you're interested in that, there's a link below, or go to bestofusinvestors.com, and I will share with you, starting on April the 1st, all the knowledge that I have. And then I'm going to bring Wes into the game. Wes is the analyst or the he looks at the movements of the market. He's a technical analyst in essence, which I do none of. And he and I are going to sort through the knowledge from all the sources that I pay for. I'm going to spend somewhere in the neighborhood of $70,000 to gather this information, to sort through it. Wes and I will then try to figure out our entry and our exit points. That's using technology on my side and your side to make you and I better investors. And that's all going to be available at our Discord. And you know how to get there. All right. I will outperform the indices this year, and I'll blow them out of the water in the coming years. Talk to you again soon.